next subject we're going to talk about is health insurance. We've already established health insurance is definitely a need, not a want. It's a necessity in life. If you don't have it, you need to get it. What a lot of people don't realize, there are a lot of more economical ways to get health insurance. So rather than having the best health insurance policy where you never have to pay anything out of pocket, you may want to consider getting a qualified, high-deductible health insurance plan, especially if you're a relatively healthy individual and you don't need to go to the doctors often. Getting a qualified, high-deductible plan makes a lot of sense. And basically the way these plans work, they may say the first $5,000 of medical expenses you have, you're not covered for that. It's on you. But because of that, the insurance company is going to charge you a lot less in health insurance premiums. You got to balance those two. If it was just one versus the other, it may make sense or may not make sense, but where it makes 100% sense is that the government also allows you to set up what's called a health savings account. What that will allow you to do as a single individual for 2022, you still have time to do it, you could put into a health savings account $3,650. If you're married, you could put away $7,300 into that account. If you're age 55 or older, you bump that up by $1,000. If your spouse is over that age, you bump it up by another $1,000. So in theory, you could put away up to $9,300 into a health savings account. Now you say, why would I want to do that? Because the money you put into the health savings account is tax deductible. That means 50% of that is going to be a tax savings to you if you're in a 50% tax bracket. You could continue to pay less money for health insurance and continue to save money in this separate account for health purposes, and hopefully you're never going to need it, right? Maybe you'll never need it, but it's good to know you're accumulating money and you can even invest that money, and then one day down the road, God forbid, you need major medical coverage because you basically your health insurance isn't enough, or you need assisted living or nursing home care. Now you have money that you could use that you already got a tax break for. Any money you take out plus the earnings on that money, completely income tax free. So I take advantage of this for myself every single year, but call me crazy, but I want to save every penny I can. And when the government gives me the opportunity to do it, why would I not take advantage of it? Right. This money continues every year. This is different than what's called a flexible spending account that many people have through large corporations. Because with flexible spending accounts, I'm not a fan because you either use it or lose it because it's not your money. So if you don't use it before the end of the year, then you lose that money. And that's why a lot of people at the end of the year, they rush out, get dental work done, get their new prescription eyeglasses. This is different. This is a separate account. Think of it as another IRA account. Think of it as another retirement account, but it's set aside for healthcare purposes. And in addition to that, if you don't need it for healthcare at all, down the road, you could actually use it and pull money out, just like you would a retirement account as well. Okay, question? No? Just a scratch? An itch? Okay, no problem. Okay, that's my humor. People usually don't laugh when I make jokes. That was no exception. Okay, so the other thing is if you're a subchapter S corporation, you must be paying your health insurance through your business. That we already established. What a lot of dentists don't realize, that health insurance has to be reflected on your W-2 form. If you are not reflecting the cost of that health insurance on your W-2 form and calling that into the payroll company, upon an IRS audit, that health insurance becomes non-deductible. It's a real pain in the butt to do it, but at the end of the year, every one of our dental clients, we go through our checklist and we advise them to call it into their payroll company to reflect that health insurance. By reflecting it in your W-2 form, not only will it make it deductible, but now you get to deduct the full cost of that health insurance in your personal return. If you or your tax advisor are taking a shortcut and not going through that extra step, upon audit, you're going to get a rude awakening because your health insurance could easily be costing you $30,000 or more a year. They're not going to just adjust it for that 1 year. They're going to go back 3 years and adjust it. That could be a costly mistake.